Ladies and gentlemen, something massive is unfolding in the global financial system. The warning signs are flashing everywhere: collapsing currencies, skyrocketing debt, central banks quietly buying gold like never before. Let's begin with the root of the entire problem: the fiat currency crisis. Understand why gold could one day reach $34 an ounce. We must first understand why our current money system is breaking down. You see, the global economy today runs on fiat currency, money that has no intrinsic value. It's not backed by gold, silver, or anything tangible. Its value comes purely from government decree, from the word fiat, meaning let it be done. And for over 50 years, since the United States abandoned the gold standard in 1971, we've been living under a massive global experiment, a world where money is created out of thin air. At first, systems seemed to work. Economies grew, markets boomed, and governments had unlimited flexibility to spend and borrow. But underneath the surface, a quiet crisis has been building, a crisis of trust, debt, and value erosion. Because when money can be created endlessly, the temptation to print more becomes irresistible. And when you print more, dilute the value of every dollar, every euro, every yen already in existence. It's the silent tax of inflation, a slow theft of purchasing power that most people never even see happening. Think about it. US dollar in 1971 could buy what today would cost more than 8. In other words, the dollar has lost over 85% of its value in 5 decades. This is not accidental, it's built into the system. Money is designed to lose value over time because it allows governments to manage debt, fund wars, stimulate economies without ever truly paying the price. But here's the problem: recycle of printing creates a bigger bubble, and each bubble needs even more printing to survive. 2009, crash, central bank slash rates. 2080, the financial crisis, they print trillions. 2020, pandemic, they print unlimited amounts. Now, here we are in 2025, global debt has surpassed 350 trillion. Inflation remains persistent, and currencies worldwide are devaluing faster than ever. This is the fiat currency trap, a system addicted to credit and stimulus, unable to stop printing without collapsing. As history shows, no fiat currency has ever survived indefinitely. Not one. From ancient Rome's denarius to France's livre, Weimar Germany's mark to Zimbabwe's dollar, every paper currency that wasn't backed by hard assets has eventually failed. Because once the link between money and value is broken, the system always drifts toward abuse, overspending, and eventually collapse. Now, the modern version of that same pattern is unfolding on a global scale. Central banks are cornered, raise interest rates to fight inflation. They risk bankrupting governments, drowning in debt. If they print more to support markets, they destroy the purchasing power of their own currency. It's a lose-lose scenario, and the world is watching it happen in real time. This is why confidence is shifting back toward real assets, gold and silver. They cannot be printed. They have no counterparty risk, have preserved value through every empire, every currency, every crash. In the 1970s, when the US left the gold standard, the price of gold exploded from 35 to over 800 an ounce, more than 20 times higher, because people realized paper money had no limits. We're at the next breaking point. Except this time, the scale is global. Every major economy, the US, Europe, China, is swimming in record debt. And when all paper systems are stretched to their limits, the world always returns to sound money. That's why some analysts calculate gold could revalue to 34 Zalohosen an ounce if it were once again used to back global currencies. It's not speculation, it's math. The total amount of money in circulation were divided by the amount of gold held by central banks. Each ounce would need to be worth tens of thousands of dollars to restore balance. That's what we mean when we say a reset is coming. Not necessarily a conspiracy, but a natural correction, a rebalancing of trust, value, and real money after decades of abuse. The fiat currency crisis isn't about politics, it's about physics. You can't print value. You can't print wealth. You can only print paper. When enough people realize that truth, when the world wakes up to the illusion of fiat, the demand for gold and silver will explode overnight. This is why smart investors, central banks, and even nations are quietly positioning themselves now. Because once the trust in paper breaks, it breaks fast, and there's no going back. The decline of the US dollar is one of the most important pieces of this puzzle because it sits at the center of the global financial system. Nearly 8 decades, the dollar has been the world's reserve currency, the benchmark used for trade, energy, international finance. But that dominance was never guaranteed to last forever. It was built on confidence in the stability of the American economy, its political system, its promise to manage its currency responsibly. That confidence is now being tested in ways we have never seen before. When the Bretton Woods system was established after World War II, the dollar was backed by gold. The world trusted it as good as gold itself. But when the United States closed the gold window in 1971, shifted the world to a purely fiat system. The dollar was still used for trade, but it was no longer backed by anything tangible. Instead, it was backed by faith in U.S. institutions, faith in the Federal Reserve, faith that the dollar would retain its value. For many years, that faith held strong because America's economy was powerful. Its military influence was unmatched and no other currency could compete. But today, that faith is eroding. Over the past 2 decades, US has printed more money than in its entire previous history. Each time there's a crisis, answer has been the same: more debt, more stimulus, more liquidity. The result is that the dollar is slowly losing its purchasing power and its credibility as a store of value. The rest of the world is watching closely, and they're not blind to what's happening. Nations that once relied on the dollar to conduct business are now seeking alternatives. The BRICS Alliance, Brazil, Russia, India, and South Africa, has been openly working on creating a new currency system backed by real assets, possibly gold. Russia and China have been steadily de-dollarizing their reserves, buying gold at record levels, signing trade deals in their own currencies. Even countries like Saudi Arabia, which for decades sold oil exclusively in US dollars, are now considering other options. This is not just about economics, it's about power. The United States' ability to print the world's reserve currency has given it immense influence globally. As inflation rises and confidence falls, that privilege is being questioned. The moment the world starts trading less in dollars, for the currency falls. When that happens, the US will no longer be able to fund its massive deficits so easily. Government currently borrows trillions every year, assuming that the world will keep buying its bonds. What happens when countries stop? The Federal Reserve will have no choice but to print even more money to fill the gap. Only accelerates the dollar's decline. This is how the vicious cycle begins. The dollar weakens, inflation rises, interest payments on the national debt explode, and the system starts to feed on itself. Reprinted dollar erodes the credibility of the entire structure. Investors and nations begin to look for something solid, something real, something that can't be devalued by political decisions. That's why gold is emerging as the ultimate safe haven. Throughout history, reserve currencies have changed many times. The Dutch guilder once ruled the seas, then came the British pound. Eventually, the US dollar took over. Each one fell for the same reason: excessive debt, military overreach, and loss of trust. The same pattern is playing out again. The United States is now over 35 trillion in debt. That doesn't include unfunded liabilities like pensions and healthcare. This mountain of debt guarantees that the government will continue to devalue its currency just to survive. Foreign investors know this. That's why gold demand is soaring among central banks. They see the writing on the wall. Gold is neutral. It carries no political risk, doesn't rely on the decisions of one government or one central bank. When the dollar weakens, gold becomes stronger by default because gold measures the value of all currencies. A falling dollar doesn't just mean higher gold prices. It signals a shift in the world's financial order. This is where the projection of 34,000 gold starts to make sense. The dollar were to lose its status as the global reserve currency, and the world turned back to gold as the ultimate settlement asset. The price of gold would need to rise dramatically to cover the value of all the paper money in circulation. It's not a dream. Arithmetic. When the global money supply grows faster than real value, the price of real assets must adjust upward to restore equilibrium. We're already seeing early signs of this shift. Is expanding its gold reserves every month. Russia has tied its currency more closely to commodities. Even smaller countries are diversifying out of the dollar into gold and other tangible assets. The more they move away, the faster the dollar's influence erodes. This isn't something that will happen overnight, but the trajectory is clear. Decline of the US dollar doesn't mean the end of America, but it does mean a massive transition in global finance. It means higher prices, reduced purchasing power, and a global revaluation of what real wealth means. When confidence in paper fades, gold steps in to rebuild that trust. The world may not officially announce a new gold standard, but in practice, that's exactly what's beginning to happen. Investors, institutions, and governments are quietly returning to gold as the ultimate foundation of value. That's why understanding the dollar's decline is so important. It's not just a currency story. It's the story of trust, power, survival in a system that's stretched to its limits. The Great Reset won't start with an announcement. Will start when enough people stop believing in the illusion of infinite money and turn back to something that has stood the test of time. Gold doesn't promise, it simply endures. And as the dollar continues to weaken, gold will once again rise to remind the world what real money truly is. Central banks around the world have quietly become the biggest buyers of gold in modern history, and this trend is one of the clearest signals that a financial reset is already underway. For years, these institutions held most of their reserves in US dollars and government bonds, but that confidence is changing. Central banks that once trusted the paper system are now protecting themselves with real assets. Understand what is coming long before the public ever does. When the people in charge of creating money start buying gold instead of printing more paper, should tell you everything you need to know about where this system is heading. In the past few years, central banks have purchased more gold than at any time since the 1960s. Countries like China, Russia, Turkey, and India are leading the charge. China, for example, has been quietly adding to its gold reserves for over a decade. It's believed they hold far more than they officially report. Russia, after being hit with sanctions and cut off from the Western financial system, accelerated its gold accumulation to back its own currency and reduce dependence on the dollar. Even smaller nations like Poland, Hungary, and Singapore have been increasing their gold holdings at a rapid pace. The question is, why now? Answer lies in the growing recognition that the world's current monetary system is unstable. Every central banker knows that the value of paper money is built on confidence, and that confidence is fading fast. The global debt bubble is enormous, inflation is persistent, geopolitical tensions are tearing apart the trust that once kept the system together. When nations no longer trust each other's currencies or the political promises that back them, return to the one form of wealth that doesn't depend on anyone else's word: gold. Central banks aren't emotional investors. Don't make moves based on short-term trends or hype. They think in decades. So when they shift reserves out of dollars and into gold, it's a long-term signal of preparation. Means they see a future where fiat currencies may no longer hold their current power, and they need something solid to fall back on. Historically, gold has always served as that foundation. It doesn't default, it doesn't rely on a government's promise, holds its value across generations. In 2024 and 2025, these gold purchases have become even more strategic. Nations are aligning themselves for a world where trade may no longer be dominated by the US dollar. The BRICS Alliance has discussed creating a new trade currency backed, at least partially, by gold or other commodities. If that happens, it would mark the beginning of a multipolar financial world where the dollar's monopoly ends. Central banks are not waiting for that moment to arrive. They are preparing for it now. For decades, developing nations depended on the dollar because it was seen as safe and liquid. But after seeing how the US can freeze assets, access to payment systems, and use the dollar as a political weapon, many countries realized they needed independence. Gold provides that independence. No one can sanction your gold. No one can devalue it through policy decisions. Exists outside of the global banking network. That's why it's being accumulated so aggressively. Current financial environment only reinforces this move. With interest rates volatile and global markets uncertain, bonds, once the preferred reserve asset, are no longer safe. Central banks are losing money on their bond portfolios as yields rise. Meanwhile, gold has quietly outperformed most currencies over the last few years, especially in countries with weak economies. Holding gold has become not just a hedge, but a necessity for survival. When you look back through history, you'll find that gold accumulation by central banks often precedes major changes in the monetary system. Before the Bretton Woods Agreement, countries hoarded gold to back their currencies. Before the collapse of that same system in 1971, gold reserves were shifting hands again. And today, the same pattern is repeating. Institutions that understand the fragility of the paper system are returning to the only asset that guarantees stability when everything else fails. The public may not see it yet, but these moves are the quiet foundation of the next phase of the global economy. When confidence in paper money finally collapses, nations holding gold will be in the strongest position to rebuild their financial systems. That's the true reason central banks are buying. They're not betting on short-term profits, preparing for a reset, a time when gold will once again anchor trust in global trade. This accumulation also sends a message to ordinary investors. If central banks with access to the best economists, analysts, data in the world are choosing gold over paper assets, what does that say about the safety of the current financial structure? These are the institutions that set monetary policy and understand the risks better than anyone else. Actions speak louder than any press release or political statement. When central banks buy gold, are quietly admitting that the system they built is no longer sustainable. They know that debt levels are too high, currencies are too inflated, and trust is eroding too fast. They know that at some point, the illusion of stability will fade. When it does, gold will once again serve as the foundation of global confidence. That's why this movement among central banks isn't just a trend, it's a warning. Silent alarm that the Great Reset is closer than most people realize. While the public debates inflation and interest rates, the real power players are preparing for a different world, one where paper promises collapse and only real assets endure. When people hear that gold could one day reach $34,000 an ounce, their first reaction is disbelief. Sounds impossible, exaggerated, even ridiculous. But when you break down the math behind that number, becomes clear that it isn't fantasy, it's a logical outcome of a broken financial system trying to rebalance itself. The price of gold has always reflected the amount of paper money chasing it. When governments create trillions of new dollars, euros, yen out of thin air, the true value of gold doesn't change. What changes is the value of the currency used to measure it. The calculation that brings gold to $34,000 isn't about gold going up. It's about paper money going down. Understand this, you have to look at the ratio between the world's total money supply and the amount of gold available to back it. Roughly 200,000 metric tons of gold that have been mined throughout all of human history. A large portion of that is held by central banks, investors, and private holders. Now, consider the size of the global financial system. Hundreds of trillions of dollars in debt, equities, and currency. The world were forced to return to a monetary system where gold backed the major currencies, Each ounce of gold would need to represent a much larger slice of that massive money supply. Simple division shows that gold would have to be worth tens of thousands of dollars per ounce to make the math balance, is where the 34,000 figure comes from. It's the price required to restore confidence if fiat money collapsed. Isn't speculation invented by conspiracy theorists. It's a conclusion drawn by analysts who understand the mechanics of monetary revaluation. During every currency crisis in history, gold has been repriced upward to reflect the true loss of purchasing power in paper money. After the Great Depression, the United States revalued gold from $20 an ounce to $35, a 70% jump overnight. One policy move instantly devalued the dollar and allowed the government to inflate its way out of debt. Imagine a similar revaluation on a global scale, where decades of debt and currency abuse are reset through a massive adjustment in gold's price. Another way to view this is through the balance sheets of central banks. As they print money to buy government bonds, value of their assets must remain credible. Gold on those balance sheets acts as an anchor of trust. If the amount of currency in circulation grows while the gold stays the same, value of that gold must rise to maintain the illusion of solvency. Central banks know this, which is why they're buying gold while they still can. They understand that when the next crisis hits, we'll need to revalue their gold reserves drastically higher to cover the mountain of paper liabilities they've created. When you hear $34,000 per ounce, you shouldn't think of it as a wild price prediction, but as an accounting adjustment waiting to happen. It's the point at which gold fully covers the explosion of debt and money that has been created since the end of the gold standard. Every new dollar printed brings that number closer, and if that revaluation occurs, the effect on silver would be just as dramatic. Historically, silver trades at a ratio of around 15-1 with gold. Even at a conservative ratio of 20-1, $34,000 gold price would push silver to over $1,700 an ounce. That's how leverage in the metals market works. When gold resets, silver multiplies. The most powerful part of this idea is that it doesn't require any new discoveries or technological breakthroughs. It's purely a monetary shift, a collective recognition that fiat currencies have been debased beyond repair. When investors, institutions, and eventually governments lose faith in paper assets, they rush to the one form of money that can't be printed. That demand alone can drive prices far beyond what traditional models predict. The revaluation won't come from speculation, will come from necessity. Think about the current global situation. Every major central bank is trapped between inflation and recession. If they raise rates, they crash the debt markets. Lower rates, they destroy their currency. Either path leads to the same destination, a loss of confidence in fiat money. When that confidence breaks, the only way to rebuild trust is through something universally accepted and finite. Gold has played that role for over 5,000 years. A price of $34,000 isn't a target. It's the value gold would assume if the world returned to honesty about how much money truly exists. Also, a psychological side to this. When people stop believing in the stability of their currency, instinctively seek something tangible. In hyperinflationary environments, gold doesn't rise because of greed, it rises because of panic. It becomes the measuring stick for the collapse of paper value. The $34 scenario represents the end game of that panic, a moment when the global financial system is forced to reset its scales. So when analysts and economists talk about a great reset, not predicting a fantasy future, they're describing an inevitable mathematical correction. The system has stretched far beyond what can be sustained by confidence alone. Eventually, gold will have to be revalued to match the massive expansion of money that has already occurred. When that happens, the world will look back and realize that $34,000 per ounce wasn't an exaggeration at all. It was simply the price of truth in a world that spent too long believing in paper promises. When a financial reset happens, not everyone benefits equally. In fact, history shows that those holding the wrong kind of assets often lose nearly everything, while those who position themselves correctly before the storm can come out far ahead. The coming gold and silver reset will be no different. The difference between owning paper assets and real, tangible wealth will determine who survives and who doesn't. The fifth key point is understanding why protecting your wealth with physical assets like gold and silver isn't just a smart move. It's essential for survival in a system on the edge of collapse. For decades, the global economy has been built on promises to repay debt, promises of stable currencies, promises of everlasting growth. But promises are only as strong as the people and institutions making them. Problem is that governments and central banks have made far more promises than they can ever keep. Printed trillions in new currency, inflated housing and stock markets to artificial highs, created mountains of debt that can never be repaid in real terms. When these promises begin to break, as they inevitably will, confidence evaporates. Once confidence is gone, only assets left standing are those that do not depend on anyone's word or digital ledger to hold value. Physical gold and silver are immune to the failures of the paper system because they exist outside it. They don't need electricity, servers, or bank accounts. They don't rely on trust in a central institution. They simply exist, as they always have, pure stores of value. When the next financial panic hits, whether it's triggered by a sovereign debt default, a banking crisis, or runaway inflation, paper assets like stocks, bonds, and digital currencies could lose massive amounts of value in a matter of days. Gold and silver will not default. They have no counterparty risk, which makes them the ultimate insurance policy. The 2008 financial crisis, most people learned that what they thought was wealth, numbers on a screen, could vanish overnight. Retirement accounts were slashed, home values crashed, and entire financial institutions disappeared. Central banks responded with more debt and more money printing, which temporarily stabilized the system but never fixed it. Instead, kicked the can down the road. Now, the global economy sits on even shakier ground, with far greater debt and less room to maneuver. Next collapse will be deeper, faster, and more destructive. When it comes, no amount of digital intervention will restore faith in the system. Only tangible assets will retain purchasing power. Holding physical metals is not about trying to get rich quickly. It's about preserving purchasing power through chaos. 1 ounce of gold bought a fine suit in ancient Rome, and it still does today. It's one of the few constants in human history. When currencies die, governments fall, or banks close, gold and silver remain universally accepted forms of wealth. A world driven by uncertainty, that kind of permanence is priceless. Owning physical metals means holding your own form of liquidity that can't be frozen, devalued, or erased. Your personal financial sovereignty in a world where control over money is slipping away from individuals. Another reason to own gold and silver is that during a reset, paper markets can become disconnected from reality. A vast difference between owning physical bullion and owning a paper contract that merely represents metal. When the system comes under strain, those paper contracts may prove worthless if the institutions behind them fail to deliver. Physical holders, on the other hand, will still have their metal in hand. History is full of examples where paper gold evaporated because the backing wasn't real. In times of panic, everyone demands delivery, but not everyone can get it. That's when the real price of gold and silver emerges, often many times higher than the quoted market price. Protecting wealth with precious metals is not just about individual security. It's also about timing. Most investors wait until a crisis hits before they act, but by then it's too late. When panic spreads, physical gold and silver become nearly impossible to find. Dealers run out of stock, premiums skyrocket, governments often impose restrictions on sales. Those who prepared in advance not only preserve their wealth, but also gain tremendous leverage because they hold assets that everyone suddenly wants. Being early is everything in this kind of transition. It's also important to remember that wealth protection isn't limited to just us buying metal. It's about understanding what it represents. Gold and silver are not investments in the traditional sense, are forms of money that exist outside the control of the financial system. They are insurance against corruption, incompetence, and systemic failure. When you hold them, you're effectively saying, I trust myself more than I trust the system. That mindset is what separates the prepared from the victims when resets occur. Coming years, the illusion of stability will begin to crumble. Inflation will eat away at savings, debt defaults will rise, confidence in the banking system will weaken. At that moment, investors will rush to anything tangible. Those who already own gold and silver will be protected. They won't be watching their digital wealth vanish, be holding something that still has value in any currency, in any country, at any time. Great Reset won't just change the value of money. It will change the meaning of wealth itself. Those who measure their prosperity in paper terms will find they've been living in a mirage. Those who measured it in real physical assets will wake up to find that their wealth not only survived but grew in relative power. Gold and silver have always outlasted every financial experiment, every fiat currency, and every empire. They will outlast this one too. A world built on promises, the only true protection is owning something that keeps its promise forever. Final key point is understanding what comes after the reset, what the world might look like once the current financial system finally breaks and gold and silver reclaim their roles as the foundation of real value. Most people believe a reset would be a single dramatic event, like a crash or government announcement, but in reality is a process, a slow unraveling of trust in paper money followed by a painful rebuilding around something stable. When that rebuilding begins, gold and silver will once again become the core of confidence, the silent backbone of a new financial era. After every great monetary collapse in history, there is always a return to something tangible, something that can't be printed or manipulated by policy. In ancient times, civilizations used gold and silver coins because everyone agreed on their value. When the Roman Empire's currency collapsed from overproduction and corruption, people abandoned the debased coins and returned to bartering with real silver. In more recent history, after the chaos of the Great Depression and the collapse of paper promises, the world came together under the Bretton Woods Agreement, linking major currencies to gold once again. Each time, the pattern is the same: paper systems rise, they are abused, they collapse, the world turns back to gold. The coming reset will follow the same pattern, only on a global scale. When confidence in fiat money disappears, governments will be forced to rebuild trust. That trust cannot be rebuilt with more paper promises or digital credits created out of nothing. Only be restored with something universally respected: gold. Central banks already know this, which is why they are hoarding gold now. They understand that in the aftermath of a reset, those who hold the most gold will have the greatest say in shaping the next system. Gold will once again act as a benchmark for currency credibility. It may not be a full return to the gold standard as it once was, will be something close, perhaps a partially gold-backed digital system or a global settlement mechanism tied to physical reserves. For ordinary people, this transition will be both a challenge and an opportunity. In the early stages of the reset, there will be chaos. Currencies will lose value rapidly, banks may limit withdrawals, governments could impose new financial controls to prevent capital flight. Inflation will surge. The cost of essential goods will rise dramatically. During this time, most people will scramble to preserve what little purchasing power they have left. But for those who already hold gold and silver, the story will be very different. As paper wealth evaporates, their tangible assets will surge in value relative to collapsing currencies. What was once a simple hedge will become the foundation of their financial security. Over time, as the dust settles and new rules emerge, gold and silver will anchor the next era of trade and savings. Nations that prepared will revalue their currencies against their gold reserves to restore balance. This revaluation will not just affect national economies, it will also redefine wealth at the individual level. The metal you hold will not just protect you, it will position you at the forefront of the new system. Just as those who owned gold before previous resets emerged far wealthier afterward, the same will happen again. A world after the reset will likely operate on a dual system. On one side, governments and central banks will digital currencies to manage transactions and taxation. But on the other side, and silver will quietly maintain their power as stores of real value. People will begin to demand convertibility, proof that their money is backed by something real. This demand will create discipline. forcing governments to maintain more honest financial policies. Gold and silver, therefore, won't just protect wealth, restore accountability. They'll act as the global financial conscience, ensuring that no government can endlessly expand its balance sheet without consequence. This shift will also change how people think about money itself. For decades, society has been conditioned to chase numbers, stock portfolios, paper returns, and inflated property values. When the reset exposes the fragility of those illusions, people will rediscover the meaning of real wealth: stability, tangibility, independence. Owning gold and silver will once again become normal, not something reserved for the few who saw it coming. Will be a return to fundamentals, a reminder that true prosperity comes from assets that exist beyond government control. The generation that lives through this reset will witness one of the greatest transfers of wealth in history. Those who prepared will not only protect what they have, but gain influence and opportunity in the rebuilding phase. Industries tied to real resources, energy, mining, agriculture, will dominate, while purely financial sectors will shrink. Trust will become the rarest and most valuable commodity, and gold will be the measure of that trust. In that world, honesty and money will matter again, because it will be backed by something unchangeable. Eventually, stability will return. Economies will begin to grow again, but this time from a more honest foundation. Gold and silver will not disappear into vaults or museums. They will quietly guide the new era of finance, reminding the world that real value never dies, it only waits to be rediscovered. The people who understood this early, who prepared before the reset rather than after, will find themselves not victims of change, but beneficiaries of it. Great Reset will be remembered not as the end of the old world, but as the rebirth of sound money, where wealth is no longer an illusion on a screen, but something you can hold in your hand and trust with your life.